Hello and welcome to the XQCPA channel, where we share with you the latest and greatest tax tips and business news. Are you a business owner with employees? If you issue payroll, you are likely familiar with payroll taxes. After all, they are a part of staying in compliance with the IRS. But there are some employers out there evading their obligation to the federal government. We call these ghost employers. A ghost employer is someone who does pay their employees, but either does not report it to the government or finds ways to keep tax money withheld from their employees' wages for themselves. There are various schemes ghost employers participate in to prevent the government from collecting employment taxes. One method ghost employers use to evade their tax obligation is paying their employees exclusively in cash to prevent a paper trail. This way, they can disregard filing paperwork and reporting these wages while keeping their employees paid. Another method is to withhold taxes from their employees' paychecks, but then proceed to never pay this withheld money to the federal government. Instead, ghost employers opt to keep the money for themselves while their employees believe their FICA taxes are being rightfully paid to the government. This practice of employer fraud has a significant impact on the tax gap. The tax gap is the difference between what the IRS has estimated to collect from the nation in taxes and the actual amount collected. With the current tax gap projected to be at $688 billion and taxes paid by employers accounting for about 65% of total tax receipts, ghost employers evading their employment tax obligations are a large part of the problem. What makes it difficult for the IRS to catch bad actors in this scheme is its inherent secrecy. Since ghost employers avoid all means of a paper trail, it is not easy for the government to track them down and hold them accountable. To combat employer fraud perpetrated by ghost employers, task forces were formed, including the Ghost Employer Project. Though dedicated efforts ceased during the pandemic, $43.6 million was collected from employers prosecuted for employment tax fraud. While the enforcement effort was labeled as a limited success by a recent Treasury Inspector General for Tax Administration report, recommendations from the TIGTA and an increased budget from the Inflation Reduction Act could see IRS action ramp up again. What this means is that employers participating in ghost employer schemes should resolve to change their ways to comply with IRS regulations and pay their fair share of taxes. After all, paying taxes is just part of a successful business's regular operation. If you are not sure of how to mend your current practices, reach out to XQCPA for guidance. We believe that compliance is vital to your business's function, and we would love to help you follow IRS rules. We hope you enjoyed today's video on ghost employers. We'd love to hear your thoughts on this topic in the comments section, especially if you are a business owner with employees of your own. As always, we will appreciate it if you like, share, and subscribe to our channel so we can continue to make great content like this for business owners like you. We will see you in the next video. Goodbye.